There's one setup that I trade every single day. It's stupid simple, but it's extremely reliable, which is why I can pull in consistent profits every single day like this, and this. And in this video, I'm going to give you the entire strategy for free. After almost 10 years in the markets, the one thing that I've understood more than anything is that simple wins. The harder you try to make this day trading thing work by learning super complicated setups, the less money you're going to make. If you're not consistent or confident in your trading right now, it's most likely because you don't have a structured, simple approach to your day trading. I'm going to give you the simplest trading strategy to start with that will give you consistent profits every single day. It's called the 30-minute candle rule. This is so simple that even if you're new, you can't really get this wrong. And just to prove to you that this works, I'm going to back test this strategy with you live just to prove to you that this is a current strategy that is working right now. By the end of this video, you're going to have everything you need to become a profitable trader with a working system that you can trust. I'm going to teach you everything from what levels to trade, how to find your exact entry point, as well as your take profit and where to put your stop loss as well. Now, you might be wondering, what is the 30-minute candle rule? All the 30-minute candle rule is the first 30-minute candle of the trading session that tells you everything you need in order to trade profitably. This works pretty much for any market, right? Whether you're in Forex, crypto, NASDAQ, but you can pretty much use this with any kind of asset that you want in any market. We're going to be using this 9:30 candle that you can see here. Importantly, we're talking about 9:30 New York Eastern Time. It's got the highest amount of volume and the highest amount of traders entering the market for the entire day, okay? And there's two key levels that we're going to mark out on this candle. All we're going to be doing here is marking out the top of the candle like this, all right? And the bottom of the candle like this. What this does now is it basically gives us a range because we're going to be looking at price action within this range to see what we're going to be doing, which direction we're going, and what we need to do next. So what we're looking for is one of these levels to basically be traded into so that we can execute a trade at one of these levels. That's all we're going to be doing. That's the simplicity of this. So once we've marked out the high and the low of the 30-minute candles, I want you to go ahead and switch over to the 5-minute candles. Now, what we typically want to see, right, is something like this. We want to see the candles kind of do a move into the price like this. We would be basically looking to place our entry like this on where the candle closes outside of the range, and then we would be looking to move in the same trend direction, right? So we're just looking to take a directional take here. The stop loss and everything I'll show you in a minute, but I'm just trying to show you that this is typically what we're looking for. Price to kind of move up outside of the range, and then we can go ahead and execute on the 5-minute chart. Very important. The 5-minute chart is what we're executing on, but we need to see it close outside of this range. So let's actually take a look and see how price actually moves here. All right. So what we've got here, let's actually just come back a little bit because it has raced ahead slightly, just to here. All right. So first things first, I have to show you a couple of different things here. Number one, this candle has basically come and it's wicked into the range, right? Outside of the range. It's really, really important that you do not enter trades unless it's actually printed outside of the range. And what I mean by printed is if you look at this candle, this is a completely finalized candle, which is printed outside of the 30-minute range. This candle wicked outside of the 30-minute range and came back in. This is not what we're looking for, right? We need displacement. Displacement is when you can see a candle has visibly moved outside of the structure that is currently consolidating within. So for example, we can see that price is really just within this little range here, right? This little section. But here, this candle has closed outside the range. It's displaced outside of the range, which means it would logically make sense for us to take a short trade. So what we're going to do is we're going to take a short position just here. And the only way that I want you to do this when you're doing your take profit and your stop loss is just going to go at the top of the wick. Okay. So it's not too crazy. And it's pretty straightforward, right? You're just going to put it at the top of the wick, not the candle close, but the wick. All right. You got to give it enough room for this to move. And then in the middle of your short position tool, you'll see a risk to reward ratio and that number there. What I want you to do is get that number to 2. What that means is that your risk to reward ratio is now 2, right? So essentially, it means that if you're risking $100, you're going to make times 2 of the amount. So if it was a $100 risk here, you would make $200 off the trade. Okay, so straightforward. Now, what we're going to do is we're actually going to go ahead and put this on a mini. So it will be 10 micros. All right. and we can go ahead and kind of simulate what this would look like in real life. So it'd be about a $1,500 loss with a take profit of roughly $3,170. All right. Now, look, we're going to be testing this strategy out over the last few weeks of price action, as I said, not to prove that the thing is perfect, that no model is perfect, right? But I just want to prove to you, more importantly, that you can have confidence in this strategy, right? You can apply this time and time again and know you're not going to have a 100% hit rate, but you will have a good enough hit rate, as I'll show you, where you can become profitable by executing this strategy. All right. So we're going to take a look at this and see how it plays out. And before we move on, for anybody that wants to simplify their trading, become more consistent, and finally become profitable, then check out my trading course, The 90-Minute Trader, where you get access to my entire trading strategy, along with my trading community and my daily market analysis so you know whether I'm going to be bullish or bearish for the day. Plus a ton of other valuable resources that allow you to become a more profitable trader as fast as possible. I'll go ahead and leave a link in the description if you want to go ahead and check that out. So let's go ahead and see how this trade plays out. All right, great. So we've managed to hit profit there. That was a $3,000 profit trade on that one right there. So let's go ahead and move on to the next trading day. Once again, we have a 30-minute candle here. We are looking for the 9:30 candle, as you can see. And we're just going to draw out the highs and the lows of this candle. So again, guys, it's really, really simple, right? I don't want you to overcomplicate this. There's a high and a low. That's the only levels we care about right now. And then we're going to switch over to the 5-minute chart to get an idea of what's going on. So here we go. So right now, we are actually at the top of the range already, right, with this. So we just need to see kind of where this closes out. It could be that we actually close right outside the 30-minute range right away. Let's play it out and see how it goes. Let's see. Okay, interesting. So we have actually closed outside the range, and we had an initial attempt here where the wick occurred. And remember what I said in the kind of earlier part of this is that we're not looking for wicks, we're looking for a close. Now, I'm not super thrilled with the close that we've received here. Um, it's not the best close. And the reason that it's not the best close is because look at the characteristics of the candles, right? They're very, very wicky. And when they're wicky like this, it kind of makes me feel like the price may reject because what we want to see is a very full candle. Like, look at this candle here. This is a very bullish candle, right? It's a very full, decisive candle. It tells us that it knows what it wants to do. It wants to go up. And really, the fact that the price action has done this, it's been very bullish throughout this range. That kind of makes me feel that we are looking at a bullish move here generally, but I don't like the characteristics of these wicks. However, we're going to follow our rules. The rules are when we get a candle close outside of the range on the 5-minute chart, remember we're on the 5-minute chart now, right? So we start on the 30, we mark up a high and a low, we then switch to the 5. We're now looking at the range. I can see that a candle has closed outside of the 5, either this one or this one. It's actually, if we're going to get very, very technical, the candle that closed outside the range is this candle here. So as soon as that candle closed, we are able to then go ahead and take a long position now because we're closing on the upside, right? We'll take a long position here. And the stop for this one, again, we can just put it at the bottom of this candle. Like I am not going to advocate putting it this far down. I don't think it's necessary particularly. We're quite bullish here. And the other thing about this, right, there's a reason that I'm saying this. So I'm just going to kind of take a little pivot here. So if we look at this little space here, if anybody knows or has watched any of my other videos, you'll know that what we have here is a 3-candle pattern where we have a fair value gap here. All right, it's a fair value gap. Now, typically what happens when you have a fair value gap is price basically will come back and it will fill the gap as it has done here. So you can look at the 5-minute candle here. It's come into this gap right here. And then the price has actually jumped and bounced out of the gap. With a fair value gap, typically, price always has to get filled within that gap, right? So we know that because this gap has been formed, the price has come back as retraced and then it's pushed out of the gap. Now, you might also notice that we've also got a gap down here. And you might be saying to yourself, well, Joey, why does the price not come back to this range? Well, it could, right? It could come back to that range and we could be wrong here. But the reason why I'm not anticipating that is because we have closed outside of the range. All right, so there is a reason, right? Because we've closed outside the range, I do not now anticipate for price to come back. If it does come back, then this is not a valid valid trade, right? Well, the setup is valid, but it just means that the trade didn't work this time. However, because we've got this gap here, I'm actually very comfortable just putting the stop here, right? I don't need it to come all the way back into this gap because the gap's already been filled. So that's just something that I want to mention there. We are now looking for a 2-hour trade, as I said before. So we're just looking for this, right? It doesn't look like a big move, right? But it it makes money, so we don't fret about that, right? So we'll go ahead again. We'll set it up for 10 micros, which is a mini there, and yeah, we'll go ahead and see how this plays out. All right, so interesting, right? Like we've gone ahead and hit target there. Uh, so that's a really nice move. The price there was $1,830 is what we would have made from that move with the stop loss just there. So at these two trades now, we've had two trades in profit. One I believe was about 3K. This one's about 1,800. So we're close to $5,000 in profit right now from these two moves, which is pretty crazy for a very minimal amount of work with such a simple setup, right? So just a couple of things here that I wanted to mention actually. I mentioned before, we had a fair value gap here. Price should not come back to this at this stage. If it does, then the trade just didn't work. But here we can see we did hit some drawdown, right? We did hit some drawdown. We came closer to stop, but we managed to actually trade out and go ahead and hit our target perfectly. So that trade worked out great. And look, I know guys that it seems really simple, kind of stupid simple, right? And I know it's very repetitive and it's kind of boring, but let me tell you guys one thing, right? I've been doing this a long time, and if there's one thing that I can tell you, that if trading is boring, you're kind of doing the right thing. Because essentially what it's showing you, right, is like if it's boring, it just means that you're being consistent, you're being repetitive. That's what it means to actually trade a system. You're not supposed to be hopping around trying to find the most exciting thing, like, trying to find the system that gets you the best win rate or the system that gets you the best return or whatever. Just have a fixed rate of return, which is a 2R, like I've shown you today, and you're just looking to trade a very repetitive system, right? And what that does for you is that it's going to give you an extreme amount of confidence when you are doing this. And that's really the most important thing. And yes, price is going to chop around sometimes. On that last setup, we just saw that price was kind of like bam, 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 bam. But that's okay. Sometimes it's going to work and sometimes it's not. But this strategy is very, very high probability. You just need to have trust in the system. And as you can see, we're up $5,000 in just a couple of days worth of trading, which is not really bad, and we're using a very, very simple system here. And I hope you can understand that as I'm doing this, like, you may have the kind of epiphany that the reason that you might not be profitable right now is because you are actually just complicating it too much. You think there's more to it, or you think that you have to be doing more stuff. But I'm telling you now that the less you do, the better. Even when you're trading, the less screen time you have, the better. The less time you spend on the charts is better. You'll automatically make more money. I can promise you that. I've been that guy that has spent hours and hours and hours of my day on charts, like sometimes literally going from London open in the morning all the way to Asia at night, spending 12 hours on the chart. It's honestly, it's mind numbing. And you don't need to do that. You just need a simple approach like this with a fixed rate of return. And that's all you need. So let's move on to the next one. Once again, I've already done the hard work for you. So we've got a 9:30 candle here on the 30-minute time frame, as I said. And all we're going to do, once again, super boring. We're just going to mark the high and we're going to mark the low. We're then going to switch over to the 5-minute time frame because that's where we're executing. And we're just going to have a little look and see what's cracking with these candles, right? So we can see I've got a nice little bullish move here. But is that where it's going to end? Let's have a look. So really interestingly here, right? You can see a couple of different things. I'm going to teach you a few little bits here. So you can see that price is wicking at the top here, which is indicative that it doesn't want to close outside the range. So you can see that as we're wicking, as we're kind of price is pushing about outside that range, it keeps closing under the range, which tells us that something's not quite allowing it to push. Remember what we talked about before, where we talked about fair value gaps, right? So we've got a fair value gap here, okay? And what I want you to know about these gaps is that typically when price comes into one of these gaps, like it did in the last trade we saw, price should bounce back out, right? It should trade in the direction that the trend is going into. Like here, it should bounce back upwards, right? So if I just show you kind of a simple example, what we kind of normally see with the fair value gap is something like this, right? Price should do that. But it hasn't done that. It's actually closed underneath the gap. And when price closes underneath the gap, it means that the gap has been inverted. So this is now known as an inverted fair value gap. And typically, when you have an inversion fair value gap, the price is going to do the opposite. So if it's now closed underneath the gap, that means that price might do something like this, where it kind of comes up like this and then it goes down like that. All right. Don't know for sure because I'm doing this live with you, but that's typically what would happen with an inversion gap. So let's see what happens here as price trades. Okay. So now, what we're going to do is, first of all, that moved pretty much perfectly. So we've had an inverted fair value gap on the 5 minute. The price came back and tested that 5 minute gap and it closed below. Not only that, but guess what? We have actually closed outside of the range. So let's do what we normally do. We are outside of the range. That means we are allowed to take the trade here. So let's just bring it back to just this candle here so that we've got a good understanding of where we are. Just going to put the stop around about here. And, typically, look, you got to be kind of discretionary with this in some regards. Like, I know we want to be as mechanical as we can. We can put the stop here if we want, or we can give ourselves some room. I do like to give ourselves a little bit of room when we're doing trades. Like, it's really important that you understand that price can obviously wick, right? Price can wick out, price can bounce around. So it's important that you give your trades enough room to trade. Okay. All right. So let's see how this one plays out. In fact, what we'll do is once again, we'll just put the order in. All right. It's always fun when we actually simulate this correctly. So stop loss, take profit here, confirm. All right. Slightly bigger risk on this one, about 2K risk on this one, but the profitability on this is $4,200. So it's a relatively healthy amount of profit. So let's see how this plays. It's taking its sweet old time. Okay, great. So it took a bit of time. This trade definitely was a bit of a longer hold, but trade played out perfectly. Really nice move. 2 hour trade, and that's the business, right? That's $4,000 there. So that's 3 of 3 trades so far. Looks pretty good. Looks pretty profitable. And I have to make the point and lament the point here. You're not gonna have a 100% hit rate. It's literally impossible to do that. But I am just kind of going back on price action here. I'm just going back day by day here. So it just so happens that these are working out quite well, but I don't want to set a false expectation for you that this is going to work every single time, because it will not. Okay. There will be times where this doesn't work. So just bear that in mind. So here we are on another one. So once again, I found the candle for you, 9:30 on the 30-minute chart. We're going to set out the high right here. Boom. And we'll set out the low. Now let's head over to our 5-minute time frame so we can take a look at our range. Here we go. And let's see what happens here. So all we're looking for, first of all, is the candle closure outside the range, as I've said. And I also want to mark out this fair value gap for you, because I want you to, these are the kind of mechanisms that I use as I'm trading, which can be really helpful for you to kind of give you extra confidence when you're trading, right? So got a fair value gap here. What would be nice is if we actually retrace into that fair value gap and come back down, because it looks like price is closing down to the lower side of the range. I don't know for sure yet, but let's see. If we invert the gap, then it gives us a great opportunity then to go long. So it just depends. So let's see. Okay, price has closed outside the range. We need to come back here, and we would be entering on this specific candle here. All right, we would be going here on the short. And what I want to do is I want to put the stop pretty much just here, right? And the reason I'm putting it here again is because we have a fair value gap there. Price may want to retrace to this gap. It might want to try and touch this gap. So it's very important that we bear in mind when there are fair value gaps, because price can gravitate towards them. So when we see something like this, if price comes in and validates this and it touches this gap, then there could be a case where price wants to invert. So we'll just give it a little bit of room here. Okay, just a tiny bit of room. And then let's go for our 2 hour move, which will be just here. All right. And then we are going to set our order. So there's a stop loss at 1690. Yep. And then the take profit down here for another $3,300 on this trade. So let's go ahead and confirm that. Let's see how this plays out. Okay, so quite choppy here. Wow, almost at our stop. Okay, boom. So we hit profit there. That's another $3,000+ trade right there. Very interesting. You can see that price did gravitate towards this gap. And this is the thing, right? You can see how close it comes to this gap. This is one of the things, like, if there is a gap like that, you can use it as a way to kind of model your stop really quite helpfully here. So the fact that we knew that the gap was there, we gave ourselves a little bit more room on the stop, which worked out perfectly. Price did come back. It rejected near the gap. It didn't touch it, but it rejected near the gap, which can also happen. And it went and hit profit perfectly. That's another $3,000. Now, if you want to get access to more advanced strategies and tools, check out my trading course, The 90-Minute Trader, where you get access to my entire trading strategy, as well as my trading community, where you can see other people using these techniques and getting profits every single day. Plus a whole load of other resources that you can use to help you get to profitability faster. I'll go ahead and leave a link for that course in the description below. And look, I give you enough information for free on this channel that will go ahead and allow you to change your life with the techniques that I'm showing you here. But if you're really serious about trading, then you should go ahead and check out the 90-Minute Trader. I'll always keep posting free, valuable content here for you to go ahead and check out on the channel. And again, the course is just for people that really want to take it to the next level and push it a little bit further. But thank you so much for watching. I hope you enjoyed it. Make sure you subscribe, and I'll see you in the next video.